What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw the Dow Jones closing at all-time highs with the Russell 2000 getting absolutely obliterated. First up, we're going to take a look at the Nasdaq 100 Triple Qs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the Triple Qs we see the price action pretty flat today, only going down 0.03%. That's another price action close below the 50 EMA, and you can see the price action is still being suppressed below a downward sloping resistance trend line. So that means that if and when we can break above the 50 EMA, we're going to come into another resistance level right away. But if we can break out of that, it should be a quick trip back up to 324. Remember that above 324, this market will start looking very bullish because that will be another daily higher high, and we're likely going to get another bullish trend building up. However, below the 50 EMA, we're still in this chop zone. And remember, this chop zone is defined as the price action being between 307 and 324. When there's no clear trend in the market, it's going to be very choppy, and we could still break to the bear side or the bull side. So we don't want to make any guesses. We want to let the price action and the trend confirm which direction this market wants to go. Now you'll notice when we look at the S&P 500 and the Dow Jones that we actually do have bullish trends. So the general bias in the stock market is still bullish, and if you watched my weekend video, you can see that we're still bullish on the weekly and the monthly charts as well. However, we still want to play it day by day, and we want to wait for the price action confirmation breakout above the 50 EMA, and we want to start seeing this trend go back to a bull trend before we get too bullish. The good news is you can see that the 20 simple moving average is flattening out, and we're no longer in this steep negatively sloping 20 simple moving average. If that 20 simple moving average can curl back up and start pushing the price action higher, we could still see all-time highs on the Nasdaq 100. Remember that the quarter one rebalancing is starting to come to an end, and soon this sector rotation should be over with, and we could see a much smoother stock market going into April. So right now the critical resistance levels are still 316, which is the 50 EMA. We'll have a quick resistance level we need to break right around 318, and then we're looking back above to 324 and 327. Downside support levels are still this 313, which is still the battlegrounds level. The longer we stay above 313, the more bullish the market is likely to become, and the longer we stay below 313, the more bearish the market is likely to come. So right now we did get two price action closes above 313, which is starting to favor to the bull side. Below 313, we still have support at 310 and 307.60. And remember, if we break down below 307.60, we're going full bear on this market, and we're likely retesting the lows at 299 and maybe below all the way down to 280. But where we are today, we're still trading above 313, and we look like we're trying to get ready to try to break out above upside resistance. Next up is the S&P 500 SPY ETF, which we also saw flat today, going down 0.05%. You can still see that we're closing above support at 394. We're closing above a positive sloping 5 EMA, and all of the moving averages are still stacked to the bull side. So the S&P 500 still does have a bull trend with bullish price action, and remember the previous all-time high is up here at 397. So it looks like we should at least retest that level, and whether or not we double top at that level or break through it and start heading up towards the next price target at 404 is to be determined. Remember, as long as we have a bullish trend, we want to have a bullish bias, which means that we're going higher in the S&P 500. We would need to start breaking down below 394 and the 20 simple moving average at 390 before we started looking at bearish scenarios. Remember, to get bearish completely, we would still need to break down below the 50 EMA, which is now down here around 386. So there's still a ton of support below the SPY ETF for the bulls to buy the dip and still form a bullish chart pattern. Remember, higher highs and higher lows are what define a bull market, and we still do have higher highs and higher lows on the S&P 500. So strong resistance at 397, but a break above there should be a quick trip towards our price target at 404. So watch that level at 397 very closely, with the downside support level being strongest around 390. On the Dow Jones, we did go up 0.32% today, and we did break out of this resistance level at 330, and we closed at a brand new all-time high. So the Dow Jones is still looking very bullish, and our next price target is still yet to be met, which is up here at 336. So it looks like the Dow Jones is still getting really strong bullish price action, and it's still in a very strong bull trend, so it should be well on its way towards that price target. Look for this breakout at 330 to now possibly act as support, and we also do have support down here at 327. In order to look at bearish scenarios, we would need to break down below 324, and then the 50 EMA is now at 318. So there's still a ton of support below for the Dow Jones bulls to build off of and continue this bullish rally to all-time highs. On the Russell 2000, we went down 2.81% today, so as you can tell, the small caps are still getting sold off, and we're still seeing money rotating around. If you've been following me for any amount of time, you know that I said the Russell 2000 was way too far extended, so hopefully this Russell 2000 correction did not catch you off guard. We're still closing below the 50 EMA, and we're developing a strengthening bear trend. The Russell 2000 is very likely going to come down and retest that support trend line at 205. Remember, this is a macro level correction, so it's very likely going to play out because the Russell 2000 was overbought and overextended on a monthly chart, which is a macro level move. It's very unlikely that the Russell 2000 could continue to go any higher without this correction. So in the long term, this is good news that the Russell 2000 is getting this correction over with, but it still does mean that there's downside potential and downside risk in the Russell. So look for support at 205, and resistance above is now the 50 EMA, which is right around 217.50. The Russell 2000 has a lot of work to do to go back to being bullish, so don't get overly bullish on the Russell 2000. Let it play out and let it find a bottom before you get overly bullish. If you're shorting the Russell, you're looking to possibly cover at support, which is down here at 205. Next up is the Arkk ETF, and we still see Cathie Wood is having a bad time because Arkk went down 2.46% today. It does look like it's finding support at the support trend line, which is right around 109. A breakdown below the trend line should bring us down to support around 105. As you can tell from this resistance trend line, we're still in a downtrend. All of the moving averages are stacked to the bear side, and the price action is still closing below all of the moving averages. Arkk now needs to break back above about 121 and 128 to even consider getting bullish on Arkk yet again. We're in a bear trend with bearish price action, so you're much better off being an Arkk bear right now. On the VIX, which is the fear indicator, we went up about 10% today, but we're still failing to break out above resistance, which is right around 21.5. Remember that the VIX is bullish below 21.5, and in order to expect a deeper correction in the stock market, we would need to see the VIX start breaking out to the high 24s. Right now, the VIX is bouncing around between this range, which is right around 18 to 21.5, and as long as the VIX can stay at these lower levels, the market is likely to continue to go to all-time highs. Remember, this is an indication of fear, so the lower the VIX goes, the higher the stock market is likely to drift. The stock market's going to take the path of least resistance, and the majority of the market is still the S&P 500 and the Dow Jones with a bullish trend in a low fear environment. On gold, it looks like we're starting to break back down, which means we could be heading back down towards support at 1686. You can see the trend is still developing bearish momentum, and the price action is closing below all of the moving averages. On silver, we also broke down below support, and it looks like we're heading down for one more leg lower, going down towards 23.5. Upside resistance is now going to be the support level at 25. You can see the trend is still stacked to the bear side, and the price action is below all of the moving averages. On Bitcoin, we went up about 2.5% at the time I'm filming this episode, and you could see that we did get that successful bounce off the 50 EMA. However, we're still not out of the water yet because Bitcoin is still failing to form a higher high. We need to break back above about 59,000 and get a closing price above that resistance level before we get too bullish on Bitcoin. Remember, on Bitcoin, I am not a bull because it's still overextended on monthly charts, which means it could go through a huge correction and or a crash before it finally finds a bottom. So right now, look for Bitcoin to fail at resistance and possibly even fail at support and go through a waterfall wave of selling. I'm not bullish on Bitcoin in the short term, and I think the upside reward is not worth the downside risk. So for now, I would just steer clear of Bitcoin and wait for this correction to play itself out, and then possibly consider buying during the correction. On Amazon, we went up 0.78% today, and we're still holding up above the support level at 30.35. If we break down below that support, there's another support level at 29.51. Upside resistance is 30.90 and the 50 EMA at 31.37. On Tesla stock, we did close below support today, going down 1.20%. We closed below 618, which means the next support level is now at 550, which means we could still be heading down towards that level. All of the moving averages are still stacked to the bear side, and upside resistance is now going to be 618, the 20 simple moving average at 650, and the 50 EMA at 690. Remember that Tesla is in a bear market, so don't get overly bullish on Tesla until we see a reversal in the trend. On Apple stock, we went up 0.15% today, and we closed above support level yet again at 120. If we break below 120, we're looking for support at 116. Upside resistance is going to be 123 and the 50 EMA at 125. Apple stock is not in a bull trend or a bear trend, and it's really just chopping around down here, consolidating around support at 120. On the financial sector, we went down 0.87% today, but we did close back above all the moving averages for 2 days in a row. We could be going back into a bull market, so we'll need to continue to watch the financial sector. On industrials, we went up 0.02% today, so flat on the day, but we're still closing above the 5 EMA with a very strong bull trend. On the energy sector, we dropped 1.19%, closing below the 20 simple moving average and the 13 EMA, and it still looks like the energy sector wants to come down and retest the 50 EMA as support. On the healthcare sector, we went up 0.47% today, and we see the healthcare sector is still closing above all the moving averages and starting to develop a bullish trend. So going back to the S&P 500, you can still see that we have some bullish sectors in the stock market and we still have a low fear environment. So right now we're going with the trend, which is still bullish, and the price action is still bullish as well, which favors that we're going to retest the previous all-time highs at 397 and possibly break and close over that level and head up to the next price target at 404. Now, there's no doubt that the market has been very choppy and volatile lately, even though we continue to see the S&P 500 and the Dow Jones performing well. This is more than likely just a sector rotation which is coming to an end, and we could see a much smoother bull market going into April. Now, watch the VIX very closely, because if something reverses, we will see a spike in the VIX, and that will be a warning sign that the market is likely going into a deeper correction. Also remember that I'm doing intraday updates on the stock market on the Stocks Channel Discord, and I'm bringing new trade ideas weekly. If you're interested in the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So next up, let's take a quick look at our trade idea, which is still Shopify, and we still see Shopify hanging around the last buy target, which is right around 1035. If Shopify starts breaking down below this support level, it will be time to cut this for a loss and move on, because it's likely going much lower. But right now it's still holding up at the low support buy level, which is the best opportunity to buy low before it starts running and possibly hits all of these price targets. So upside price targets are still 1079, 1111, 1134, and 1200. So if you're in Shopify, you're looking to buy off support and sell at resistance, or short at resistance and cover at support. So thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.